All right, so what's in my stock market portfolio? So first of all, I'm sitting at 105 Canadian across all my accounts. It could easily be 106 if Intel comes back up to the $56, $58 range, because I think I'm about $1,000 down just on Intel. So if you look at my margin account, you can see I've got 2,100 cash Canadian and 1,500 US cash. But my maintenance excess, which basically it helps, which is my buying power, is much higher. That's because my TFSA is linked to it, which adds buying power to my margin account, as I mentioned in my last video. And that's what allows me to place my trades in my margin account. So as you can see, my TFSA 11K Canadian and 37 US, but there's no market value. There's no equity. I didn't buy anything. It's all cash because I just don't know what to buy. I don't trust the market, but at least I'm using this cash as buying power in my margin account to be able to place my put spreads, my credit spreads, my naked calls, my naked puts, and so on. So right now in my margin account, all my last week trades were closed. The earning trades expired worthless, so they just disappear the next day. I've opened an Apple put spread on Friday for next Friday, so September 4th expiry. I opened it at a 475 short strike. Now with the split, this is gonna get adjusted. Curious to see. It's the first time I buy an option or hold an option trade after a split, so we'll see how this gets adjusted. I'm curious to see how it gets adjusted. I did an earnings trade on DocuSign a little bit early. I think it has earnings. Oh, there you go. It has earnings September 3rd. I just did it early because the premiums were nice. Collected about 95 cents at a 190 strike, and right now DocuSign is trading at 215. And I did my regular SPY put spread on Friday. This is actually it's actually very profitable. I was close to closing it at 50%, but I want to hold till expiration just to get more profit out of it and to save on commissions. Because as you could see in my last video, I would have almost doubled my weekly profit if I just held till expiration. But it was already trading. I opened it for 62 cents and it was already trading for about 36 cents, so almost 50%. So 50% would be 31 cents, closing it at 31 cents. But I'll see if I can hold it till expiration. It's just that the short put is pretty high. It's 342, SPY's at 350. If we have a normal pullback, it's gonna drop below 342. So these are the 3 put spreads that I hold in my margin account. I plan on opening others next week, depending on how the market reacts. So I'll look for anything that dropped hard on Monday and something that has high IV, and I'll sell a put spread. So DocuSign, Apple, they all had high IV. That's why I did a put spread on them. Adobe, Alibaba, they also have high IV, but I'll see if they drop on Monday or not. So how do I verify high IV? I use a website called Market Chameleon, and I go to options, and then I go to implied volatility rankings, and then I choose market cap over 10 billion just to deal with more stable stocks. IV rank over 70, and then I sort by IV rank. And basically, as you can see, it says Baba, DocuSign, ZS Scaler, whatever that is, Adobe, Apple, CRM. So I'll go through them. I'll see if the put spread is interesting. I usually do a put spread at expected move. So I look at the straddle value for the expiry, and then I go, if the straddle value, let's say, is 30 points, then I'll go 30 points lower from the current market price as my short strike. So 475, for example, on Apple, because it was trading at 505. And if I can collect at least 80 cents in a 1 week trade, then I'll take it. If it's less than 80 cents, then premiums are not that high. Apple, I think I collected 90 cents, and DocuSign I collected 95 cents. So much higher than my SPY put spread, which I only collected 62 cents. Because SPY doesn't have high IV right now compared to these stocks here, Facebook, Tesla. So all these stocks here, they have high IV rank. Doesn't mean that they're perfect for trading, but it's a starting point. You can start looking at premiums to see if it's worth it, if you can go far enough to sell options, making the trade safe or not. Silver has been having high IV for a very long time now. Silver and gold premiums are pretty high on silver as well, but it's going to be hard to do a put spread on silver because the stock price is small. But maybe a naked put or a naked call could be interesting on silver. So yeah, so I'll look at that on Monday. It's going to change for sure on Monday. I had a trade on an Adobe, but it didn't get filled. I might do Adobe. It's got earnings not next week, but the week after. It has earnings, but not next week, so that's fine. So it's just a matter of looking for stocks with high IV and sell premiums against them. I prefer to sell put spreads. I find that I've had better success with put spreads and call spreads. I seem to always get tested on the call side, and especially with this market that just keeps going up, put spreads seem safer. And I find they're easier to manage because if a stock goes below my short put, I'm going to sell a call spread against it, and the call spread will have higher premiums because the stock dropped, and since the stock dropped, IV for that stock goes up. So it's like a self-hedging trade. So that's why I prefer to sell the put spreads. And there's more pressure for the stock to go up. I find there's more upward pressure. So in my Tfsa, I have nothing. It's all cash. I'm open to suggestions. Leave in the comment section below. In my RSP, I've got covered call trades. So I've got IWM that I've had since February, end of February. I'm perfect at timing stocks. I bought IWM when it was before the market crash, right before the market crash. Bought it at 164.5 about, but then I bought it several times after to average down my cost to about 151.6. But just amazing how I have perfect timing. And anyways, I've been selling covered calls on it every week. It's been going very well because right now I'm sitting at a 152 strike. I'm okay selling my shares. I'm just extracting as much premiums as I can from it. I don't want to hold it because I think we're going to go through another correction. So I'm just trying to extract as much premiums as I can. This week I collected, if I go to orders, executed, collected 58 cents. Last week was $1. The week before was 90 cents. I actually had a chance to get $1.10 on Thursday, or was it Wednesday? But I didn't. I think it was Thursday, but I didn't take the trade. I got greedy. I thought maybe I'd get more on Friday, but when IWM went up, then it gives me less credit to collect because it's further away from my 152 strike. But when IWM dropped on Thursday to 154, I could have collected $1.10, which would have been much better than 58 cents. Regardless, it's still free money, 58 cents or $58. I've got Micron that has an expiry of next week, September 4th, so I'm going to sell a new call option on it. This one I had sold because Micron dropped to 43, so I wasn't able to collect much. Collected 41 cents, but as you can see, it's worth 90 cents. So I'm actually losing money on this covered call option that I sold, but as long as it stays below 46, or even if it goes above 46, I don't care. I get my capital back. I sold a few, I think I sold twice on Micron. So I collected 39 cents once, and I collected about $1.10 the first time. But I could sell again next week. If it trades around 46, then my premium will be higher for next week. And this was an earnings trade that I made. It had high premiums. I think if I have the chance to get out of it, I'll get out of it. But anyways, I sold a call option against it the first week. I think I collected $1.50. And then the second time I collected, here, let's go to executed. But basically, I'm just selling covered calls on it. So I'm collecting premiums on it. So the first time is, I collected $1.50, and then second time collected 30 cents, so $30. The third time $65, and we'll see next week what I can. Actually, this one expires September 25th, so this one I have to hold on to it for a bit longer. But once September 25th comes, wherever the higher it trades, of course, if it's trading close to 23.5, which is my strike, then I'll get a better premium. In my RESP, I bought Intel. I did 2 covered calls on it. I sold 2 call options against it, and then earnings came up. I wasn't worried for earnings. I thought for sure it'll go up, or maybe if it drops, it'll drop very little because it's Intel. It actually dropped a lot instead. And it went all the way down to 48. Now it's back up to 50.43. I've got an average cost of 56. And I've been selling call options against it, not getting much out of it. Premiums are very low at the 56 strike because it's very far from the current market price. But right now I've got a 56 call that expires September 25th, same time as the Virgin Galactic. When September 25th comes along, the closer Intel is to 56, the better the premium I can collect on the next time I sell a call option. So that's basically it in my portfolio. I've got a decent amount of cash in my Tfsa, but I just don't know what to buy. But I'm ready to use it if the opportunity comes. And in my margin account, I'll keep trading put spreads and out of the money options, either calls or puts, and some earning trades as well. So if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link in the description below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.